Hello and welcome back to Explain the Charts. Today, July 14th, 2025, we're diving into the SPY, the S&P 500 ETF. We will examine the current market news and analyze the SPY's recent price action to try and see where it may be headed. First, let's discuss the top market headlines. According to recent reports, stock futures are sliding amid ongoing concerns about potential tariffs, particularly those threatened by former President Trump on the EU and Mexico. These concerns are weighing heavily on investor sentiment, creating uncertainty in the market. RBC Capital Markets has adjusted its year-end SPY target to 6,250. Ed Yardeni has a target of 6,500. Now, let's transition to the technical analysis of the SPY chart. We'll start with the daily chart to gain a broader perspective. Looking at the daily chart, we can see some significant volatility over the past few months. We saw big drops in April, which quickly recovered. Then, in August and September, we saw some sharp declines, but strong bounces back up. Currently, the SPY is trading around 562, but recent trading days have been mixed, bouncing up and down without too much directional strength. Looking back to early July 2024, we can see prices around 545, so we've had a strong, sustained uptrend since then. If the tariff concerns intensify, we might see a retest of the 550 level, which acted as support in previous months. A break below this level could trigger further selling. However, should the tariff situation resolve favorably, a move towards 580 and beyond is quite possible. Let's take a closer look at the daily chart. Focusing on the candles in early March, we see SPY around 510, which is a key level to consider. Now, let's shift our attention to the 1-hour chart to see some more detail. On the hourly chart, we can see more granular price action, showing some pretty intense range trading, swinging back and forth. Zooming in on the recent candle shows several attempts to break higher. A confirmed breakout above 565 could signal a bullish continuation, while a failure to hold above 555 may indicate further downside risk. This consolidation suggests indecision in the market, making it crucial to monitor breakout or breakdown levels. This means a good strategy would be to set tight stop losses or look for short-term opportunities within the range. Finally, looking at the 15-minute chart, we can identify potential short-term trading opportunities and even more specific levels. However, keep in mind with such short periods, the risk of random price swings are high and you must have tight stop losses. In summary, key price levels to watch are 550 as a significant support on the daily chart. Breaking below this could open a path to 540. On the upside, 565 acts as an immediate resistance. A decisive move above 565 increases the likelihood of testing higher targets. I personally believe that we will see a test of the 580 level with 60% likelihood if we break 565, but if we fall below 550, we will likely see SPY down to 540 with 70% likelihood. Keep an eye on tariff-related news, as these events can significantly impact SPY. Manage your risk carefully and consider all of these factors in your decisions.